Welcome to today's market wrap-up for October 11th. All four major U.S. indices closed in positive territory today. The Dow Jones Industrial Average led the pack, rising 0.97% and hitting a new all-time high. The S&P 500 gained 0.61%, and at this pace, it seems likely that the index could reach 6,000 points by the end of the year. Nasdaq had a more modest increase of 0.33%, and the Russell 2000, representing small and mid-cap stocks, surged by 2.1%, driven by strength in value stocks. Now, let's take a look at commodities. Oil prices eased slightly, with a 0.35% decline, bringing the price to about $75.60 per barrel. Meanwhile, gold rose by 1.28%, reaching $2,673 per ounce. In the cryptocurrency market, Bitcoin is holding steady at around $63,000. Moving on to bonds, yields have pulled back. The 10-year Treasury yield fell to 4.08%, and the 2-year dropped to 3.94%. Interestingly, the yield curve, which had briefly inverted last week, has started to normalize again. The difference between the two yields is widening, which could indicate easing concerns over a potential recession. Let's take a look at the charts. This week, the S&P 500 and the Dow Jones have been consistently setting new highs, with strong performances pushing the markets upward. On the other hand, while Nasdaq remains positive, it hasn't quite broken through to new highs yet. In terms of stock movements, value stocks were the clear winners today. Comparing the four indices, the Russell 2000 showed the strongest performance, followed by the Dow Jones. This reflects a surge in small and mid-cap value stocks, which significantly outperformed the broader market. Looking at ETFs, the Russell 2000 ETF saw a substantial jump today, but it's still below its recent highs, leaving room for further gains. If small and mid-cap stocks continue to rally, this could provide a strong boost to the overall market, possibly driving the S&P 500 towards 6,000 points. Breaking it down even further, mid-cap stocks have already hit new highs, which shows the strength in this segment. The market's rally is being supported by large-cap value stocks, like those in the Dow, as well as mid-cap value stocks. In the semiconductor sector, Broadcom was down 2%, but the rest of the sector remained relatively stable. Big tech stocks had mixed results. Apple dropped 0.6%, while Google, Meta, and Amazon all ended the day higher. On the downside, Tesla fell by over 8%, following a disappointing investor reaction to its recent RoboTaxi event. The lack of significant updates on self-driving technology led to a sell-off, while competitors like Uber gained 10%, and Lyft also saw a sharp rise. Looking at the financial sector, J.P. Morgan and Wells Fargo reported earnings today. J.P. Morgan shares rose as net interest income exceeded expectations, with full-year guidance raised. The bank's net interest income surged due to strong loan demand and rising interest rates, which allowed them to lend at higher rates while still borrowing at lower ones. On the other hand, Wells Fargo saw a decline in net interest income, but strong fee revenue from investment banking helped boost its earnings, leading to a rise in its stock price. In economic data, the September Producer Price Index, PPI, came in slightly above expectations, with year-over-year inflation at 1.8%. However, the monthly increase was only 0%, which shows inflation is cooling off. Gasoline prices declined, contributing to this trend. The Federal Reserve will likely look to the PCE index at the end of the month for further insights into inflation. Overall, today's market action was led by value stocks and mid-cap stocks, with both large and mid-sized companies showing strength. Semiconductor stocks were a bit mixed, and big tech had a varied performance. Investors remain cautious about Tesla's self-driving technology, and the financial sector is seeing strong gains as major banks benefit from rising interest rates. That's it for today's market wrap-up. Thanks for watching, and we'll see you again tomorrow with the latest updates.